The U.S. stock market is witnessing one of the most powerful rallies in recent history, with major indexes reaching record-breaking levels and raising a big question across the financial world. What exactly is driving this economic surge since the market lows earlier this year? The Dow Jones Industrial Average has surged by more than 30%, while the S&P 500 has climbed nearly 40%. The Nasdaq, powered largely by technology and artificial intelligence companies, has jumped close to 50%. These numbers are not just statistics. They reflect a major shift in economic momentum that many analysts believe is being fueled by a new wave of productivity growth. According to economic analysts, one of the biggest drivers behind this momentum is the rapid expansion of artificial intelligence and advanced technology investments. Historically, major economic expansions have often followed periods of technological innovation. From the Industrial Revolution to the digital age, productivity improvements have consistently led to higher wages, stronger corporate profits, and long-term economic growth. Today, many economists argue that AI is creating a similar transformation, allowing businesses to operate more efficiently while increasing overall output. Another key factor being highlighted is rising capital investment. Companies are spending heavily on infrastructure, data centers, and AI-related development, which is increasing productivity across industries. As businesses invest more, the impact eventually spreads to workers through higher wages and improved employment opportunities. Economic data now suggests that wage growth is beginning to outpace inflation, meaning households are starting to feel financial relief after years of price pressure. Recent surveys indicate that consumers are gradually becoming more optimistic as paychecks improve and salary adjustments take effect at the start of the year. Analysts say this shift in consumer confidence could lead to stronger spending activity, potentially creating a powerful consumer-driven expansion in the coming months. Economic growth projections have also surprised many forecasters. Earlier estimates predicted modest growth, but current expectations suggest significantly stronger performance, with GDP growth exceeding previous forecasts. If this trend continues, it could signal a broader economic expansion supported by strong labor markets, rising corporate earnings, and sustained consumer demand. Corporate profits remain another major pillar behind the stock market rally. Many companies have reported earnings that exceeded expectations, reinforcing investor confidence. While some analysts warn that certain sectors may appear overheated, the overall trend suggests that productivity gains and technological innovation are supporting long-term profitability rather than a short-term spike. At the same time, wage growth appears to be catching up with earlier profit gains. Economists note that in many economic cycles, corporate profits rise first, followed later by increases in worker compensation. Current data suggests that this transition may already be underway, with real wages growing faster than inflation for many families. Looking ahead, the key question remains whether this momentum can continue. Supporters argue that strong economic policies, technological innovation, and rising investment are creating conditions for sustained growth. Critics, however, remain cautious, warning that global risks, inflation pressures, or policy changes could still impact markets. For now, financial markets appear optimistic. With AI transforming industries, corporate earnings remaining strong, and consumers beginning to see real income gains, the current economic environment is being described by some analysts as the beginning of a new productivity-driven era. Whether this becomes a long-term economic boom or simply another market cycle will depend on how these trends evolve in the months ahead. But one thing is clear: the global financial world is closely watching America's economic performance as markets continue to push toward historic highs.